So essentially at this current moment, I don't think there is any more shares left for AMC stock, and I want to elaborate on exactly what I'm talking about here in this video because I think it is a very bullish thing. Now, I do also want to go over the short interest data, everything else you guys need to know, the option activity heading into next week, and potentially what I expect to happen here in the markets. I think it's very exciting, and I think this is a one-in-a-lifetime buying opportunity that you guys have, not only for AMC but for other stocks as well. If you guys want to take advantage of that, get access to everything that I am buying, quality companies, quality trades, check that out, link down below in the description. As well as that, there is a link in the description for the sponsor of this video, which is Moomoo. They want to give you 7 free stocks when you open and fund an account with $100. This promotion only lasts until June 30th, so you still have about 11 days, give or take, 12 days actually, to be a part of this, and definitely that's something you guys want to do. From my personal experience, I did get a free share of Apple just from doing that. You buy, you hold, you let it sit. Moomoo also has free short interest data. They have a great news wire as well as just an overall social aspect to the platform, which I do really love, as well as option trading is very easy to do as well. So check that out if you guys have not already. Nonetheless, let's get into the concept of this video, which is no more shares left for AMC stock. And exactly what I mean by that is something that I don't think a lot of people have talked about at all. I have not seen this talked about at all really over the last couple of weeks, but we have seen the share utilization at 100% over the last, it's got to be a couple months now, right? And what does this actually mean? Well, what does share utilization mean? Just a simple Google search. Utilization is the number of loan shares divided by the available shares in the securities lending market, is expressed as a percentage. Essentially, it is a measure of demand for shares from short sellers. But let me read this slower. Utilization is the number of loan shares divided by the available shares in the securities lending market. So 100% share utilization means there is no more shares left. And what does this really show? What does it show me? It shows me that yes, while there has been people that have traded in and out of AMC stock over the past year, essentially, yeah, that's gonna happen. If somebody tells you that everyone has sat there and bought, just continue to buy AMC stock and they have not sold a thing, they are lying to you. Maybe you have not sold, but other people have. But at the same time, the people that have continued to buy and hold the stock and acquire more shares have slowly constricted the float to where we currently sit right now. We have free flow out on loan at about 38%, meaning that if we own, let's just call it 80% of the float or 90% of the float, whatever you want the number to be. Obviously, it's not definitive. Adam Aaron did say that we owned over 90% of the float. That was a year ago. Who knows what has happened since then? Let's just call it 90% of the float, even though that may or may not be the right number. If we own 90% of the float, free flow out on loan is at 38%. Well, that means there's actually 28% additional shares that are out there in the form of IOUs, whether it is with the option activity or it is just straight up IOUs in the free flow out on loan. But either way, there's more shares out there than what there should be. And that's essentially why the utilization is 100%, because you cannot have just hundreds of percent of the overall float just out there and continuously out there, because at the bottom line, if a stock goes to the moon or a stock goes to zero, there will be an obligation for, in that case, hundreds of percentages of the float to be obliged for, and people to actually get paid out, whether it is on the short side if the stock were to go to zero, or if it's on the long side like us apes and we get the MOAS. So that's why you can have IOUs, and market makers are allowed to give out these IOUs, but not to a ridiculous extent. And I would even argue that 28-30% of the float in IOUs is a very, very big deal. And that is essentially the beautiful thing about where we currently sit. There is no more shares left to actually lend out and to sell short, in my personal opinion. That's why I do think there is a lot of this option activity that is forcing the market makers to go short on a lot of shares, but it's not necessarily moving up the short interest. So essentially where we're currently at is possibly maxed out on the short interest, unless we see a big firm, a big bank, or someone else do kind of what they did to Redbox. And that would be like, hey, AMC has 500 million shares outstanding, right? 513 million, 516 million, whatever the actual number is. I think Adam Aaron said 516 million, whatever the number is. So let's say a fund came out and bought 100 million shares. Well, technically, they would reduce the free float by 20%. And what would that do? That would boost up the short interest. Unless that happens, I think the short interest is really capped out. And we are at a very critical moment. And I think that's why you are starting to see the cost to borrow rates going up. It all comes back to there is no shares left to actually be lent out. We have a control of the float. These shares that are free float out on loan, they're likely just IOUs, and that is why if hedge funds want that downside exposure, they want to continue to essentially short the stock, they're going with these close to the money put options, because when these puts are close to the money, essentially that's like dollar for dollar on a short position, right? If a hedge fund is buying like this option right here, they actually bought on Friday, a July 1st expiration, a $12 strike, and they paid $99 for that. Well, they're pretty much in the money already, right? And that's not being counted into the short interest. Essentially, the market makers having to go out and actually short stock. So I do think this puts us in a very, very good situation. Current short interest of free float 22.69%. Current shares that are sold short of 117 million. Cost to borrow minimum of almost 15%. Cost to borrow average of 19%, and cost to borrow max at 21%. Like I said, 100% share utilization. Shares out on loan 195.76 million, almost 196 million. Free float out on loan, like I said as well, 38%. And I really think as of right now, until we get a big catalyst, until we get bankruptcy, something to cause hedge funds to cover in a big way, I think we're really being driven on a day-to-day basis really by the option activity. Days where the option activity is very negative, you don't tend to go up in the price of AMC. Days that are extremely positive, I mean, you tend to go up because of the option activity, vice versa to the downside. I think it's all based off of what's actually going on with the market makers. And if you actually were to add up, which feel free to do this, I'm not going to do this because it would take a very long time. But if you were to add up all of the option activity and how many shares that are currently short by the market makers, you could see an explosive 20, 30, 40, 50% rally just based off of the market makers having to buy back their stock that is short. So the actual short interest is much, much higher than 22.69%. So hopefully you guys are excited by that, and hopefully you remember 100% share utilization means there's essentially no more shares left to sell short or to borrow for AMC stock, because we are restricting the float in such a dramatic way. Now, at the same time, what do we have in store for next week, and what do I think is going to happen? I think we could be in for a short-term 5 to 10% bounce in the markets. That would obviously put AMC stock in a better place than not. AMC does tend to well outperform the markets on good days and underperform the markets on bad days, but even a 5% rally from here would only put us roughly at 384 on the S&P. A 10% rally from here would put us roughly at about 402 on the S&P 500. So it would only be reclaiming a little bit of ground. And why I think we could potentially see a rally is because I think somebody got vaporized over the weekend. I think some of that leverage has been taken out of the markets, especially in the crypto markets, because of the drop that we have seen. And maybe there is a breath of fresh air. But really the biggest thing is you don't have a lot of economic data at all coming out. You do have some real estate data that comes out, but nothing that's going to move the markets in a big way. Now, something that I do think can be very important for the markets, something I want to pay very close attention to, is actually happening on Thursday, June 23rd. Keep in mind, we do not trade on Monday, because that's what we're given. Father's Day, Juneteenth. I don't even know how to say that, but that's why we are not trading on Monday. But nonetheless, the Fed bank stress test results come out 3:30 p.m. on Thursday, and I think that's going to give us a glimpse into potentially where the banks are at. And I think that could either be a bullish thing or a very bearish thing for the markets. But the lack of data overall, I think, should be somewhat of a bullish thing, because after all, we're at the lows of 2022, and we just did get the Fed meeting out the way. And usually what we see from that is a sigh of relief until we get earnings that come back around, and I believe earnings are going to start coming out here pretty damn shortly. So I think that's going to be exciting, and I think that's potentially when we could get that next leg down. We're not going to hear good things coming from businesses at all. It's not going to be pretty. Just keep that in mind, guys. Keep that in mind. You definitely, in my opinion, if we do see a 5 to 10% bounce heading into earnings, that is your opportunity to get some more downside protection. I personally do not think it is right now. And if you guys want access to all of my trades, link down below in the pinned comment. We hit this drop on the head. We were buying puts up here in between June 3rd and June 8th, and obviously hit over 1,000% on some of those put trades. So incredible opportunity that you guys are actually faced with as of right now. Now, if we look at the option activity, what we're essentially seeing for this upcoming week is nothing too crazy. About 9,200 calls that are in the money, 61,000 calls that are out of the money, 3,000 puts that are in the money. Nothing too crazy for the next 3 weeks, but that big option expiration is going to be July 15th, and I think that's where you could possibly see a lot more upside with a pretty substantial gamma squeeze overall. You have about 402,000 calls that are out of the money, 10,000 calls that are currently in the money, 87,000 puts that are in the money as well. If the puts run out of the money, market makers have to go out and buy stock to essentially de-hedge all of the puts that they had to short stock to hedge for. And the same thing on the call side. When the calls go into the money, the market makers obviously have to go out and buy stock on the open market. That one is pretty straightforward. So overall, I am expecting a little bit of bullish activity this upcoming week, and I do think AMC stock will make a move to the upside, but I do ultimately think we will go lower than where we currently sit. I do think the bottom that we're going to see is after these bankruptcies are announced, after these hedge funds get vaporized, and it's probably going to be this pre-COVID peak around 330 on the S&P 500, and that is the moment where essentially that's where I want to go into margin. That's where I want to start buying stocks with a lot more leverage. Those are my thoughts. Leave your thoughts down below in the comment section. I think we covered a lot of ground here in this video. I'm very excited for what I'm seeing. Forget the people that are negative, seriously, in the comment section. I know people are going to be negative. They're going to say this is all a scam. AMC's not going nowhere. Forget them. You know what you know. You know this trade, just like I know this trade. You need zero validation from anyone else. And that comes from the bottom of my heart, the bottom of my soul. I don't care who likes this information, who doesn't. That's the information we are presented with, and that is where I base my investments and my conclusions and why I am so bullish on AMC heading into the future. The MOAS is literally inevitable. Hit that like button, subscribe to the channel, check out Moomoo if you guys want to get those 7 free stocks. If you guys want to trade with me live in real time every single day, link down below in the description of this video. Thank you guys for watching, and I will see you in the next one.